welcome back to Focus Investing, where we follow one course until successful. I actually wanted to talk about a topic that has been storming the world, especially with the GameStop frenzy, right? So we've had this amazing and incredible run in GameStop recently, and not just GameStop, but AMC and other stocks like BlackBerry, Tootsie Roll. I mean, you name it. There was a number of stocks that were just experiencing an upsurge due to the short squeeze that were basically gutting the hedge fund managers that were trying to short these stocks. And eventually, some of the brokers basically were putting limits on how many stocks you could buy, and in some cases, they even completely would not allow you to buy more shares, and they would only allow you to sell. And that has just sparked a lot of debate about GameStop and the Reddit page and all that. And so that brought a lot of conversation, and I was just thinking about what are some traits that allows you to be a successful investor in the stock market, right? So GameStop is a one-time thing, right? You can't expect that every stock is going to have 700% return in less than a month. So you have to prepare yourself for the reality of being a long-term investor and what is your long game, right? And here are a few things that I have learned as an investor in the last 3 years of being in the market and just kind of learning, right? So for me, the top three traits that you need as an investor is, the first and foremost is understanding the value of a business, because this gives you the opportunity to be able to understand the business itself, right? And how do you go about in understanding the value? So a lot of it comes down to being able to read or listen in to the conference calls that they have every quarter, or the quarterly reports, right? Just listening to understand in the businesses that you're invested in, right? Like, for example, if you listen to Facebook, you're going to learn a lot about that business. And based on the information that you receive during those calls, you'll be able to make sound judgments about their business value, right? And you can use those judgments to make uh, reasonable investment decisions. And the other thing that I really want to note here is being able to understand technical analysis. So, technical analysis is basically being able to look at a chart and understand when something is overbought and when something is oversold, and using that as a guiding principle to make some of your decisions as far as when to take profit and maybe when to let that stock rebound, right? Because you don't want to buy high and sell low, right? The name of the game is you buy low, right? And you can't time the market, so don't even bother or try timing the market. But when you have those one-offs, right, where the market just sells off, and you know that that presents you with an opportunity to enter the market, then that's when you enter the market, right? And then you try to sell at that peak point, right? And the other thing that I did want to mention, the last thing, is to be able to manage your risk, because without effective risk management skills, you will not be able to make a dime in the market. In fact, I think there's a statistics out there that a lot of people like to cite, and that is more than, I think, 80% of investors actually lose money in the market, right? Or at least like individual investors. So we're not talking about hedge funds uh, and the big guys that run Wall Street, right? We're talking about if you are an individual investor and you go into the market, it's actually a very hard place to make money. But if you can master these three things, I feel like you are on the way to success, right? Understand the value of a business and use that to guide your decision making in insofar as which stocks I'm going to invest in. Do I see the business value of this company increasing in the next year, 2 years, and even 10 years, right? Do I see this business being around in 10 years? And then using your technical charts to be able to understand, okay, is this something that I want to be invested in at current price points, right? Or should I wait a little bit to enter a position, right? And then the last thing is, of course, risk management, right? So if you, let's say, have invested in a stock and that stock has given you, 40% return, should I be taking a little bit of profit and then allowing for that stock to sell off a little bit so that I could maybe re-enter the position? at a lower price point so that I can continue riding it back up, right? And just being able to understand those three things really well, and having good temperament, right? Not being driven by emotion, but being practical in your decision making will allow you to position yourself for success in the market. So let me know what you think. I hope you enjoyed this video. I just wanted to talk about this because I know this is something that has been kind of out there, and a lot of people have been talking about, GameStop and what that means for the market, and how should, uh, I guess, amateur investors approach the market going forward. Is this a realistic expectation going forward? And I just wanted to touch base and kind of share kind of what my experience has been in the market. And I hope you learned something from it. Please be sure to leave a comment below. And if you enjoyed this video, also be sure to give it a thumbs up. I hope you have a good day and see you on the next episode.